Good day, everyone. Good day, sir. This is our case study based on Vita Coco, submitted by our group, the Group 5.
So, Vita Coco was founded by Michael Turban and Ira Liran after they discovered the growing demand for coconut water in Brazil. From a small import business, it has grown into a global leader in plant-based beverages, which offers coconut-watered, flavored drinks, and other natural hydration products. Headquartered in New York City, the company aims to build a brand that value fairness, transparency, and care for environment. So it is also recognized as a certified B corporation, showing its commitment to sustainability and social responsibility. So Vita Coco operates in multiple countries and maintains partnership with processing facilities in Asia and South America to ensure quality and efficiency. So its success continued to reflect its dedication to health, sustainability, and innovation, which making it one of the most trusted brands in the global beverage industry.
While Vita Coco has achieved strong market presence and sustainability recognition, it shows some tragic limitations. The company remains heavily reliant on coconut based products, which may limit diversification and expose it to supply risks tied to climate and agricultural vitality. Additionally, while it has expanded globally, there is limited visibility into localized strategies for different markets, which could affect competitiveness in regions with different consumer preferences. And lastly, its focus on sustainability is commendable, but long term innovation strategies such as digital transformation, R&D investment, or broader health and wellness product development and these are not clearly outlined, which may hinder future adaptability in a fast evolving beverage industry.
After learning about company background of Vita Coco, let's talk about the demand for Vita Coco and the market trends affecting it. Let us start with the global picture. Vita Coco continues to grow steadily worldwide because more consumers are becoming health conscious. Many people are shifting away from sugary sodas and artificial soft drinks and are instead choosing natural and low sugar options. This shift has helped coconut water become more mainstream, and Vita Coco remains one of the leading brands in this category. Now, when we look at the Philippines, the situation is a bit different. Even though our country has an abundant supply of coconuts, we're not actually a major consumer of Vita Coco. Instead, we serve mostly as a production and export center. So, the demand here is not as strong, but the industry still benefits because coconut farming communities and local companies are supported through the brand's partnership. In terms of market trends affecting Vita Coco, there are a few important ones. First is the continued rise of health and wellness awareness. More people are looking for natural hydration options. Second, sustainability matters more to consumers now, and Vita Coco highlights their ethical sourcing and support for coconut farmers. Lastly, as coconut water is not just a post workout drink, people now use it daily in smoothies and as a base for functional beverages. Overall, the brand growth is driven by global health trends, sustainability efforts, and changing lifestyle habits, while the Philippines mainly plays a key role in supporting production rather than consumption.
What does the demand look like in the Philippines compared to other countries? Locally, demand remains relatively limited since the Philippines primarily serves as a production and export base rather than a large consumer market. Meanwhile, on a global scale, the demand for coconut water continues to rise. This increase is driven by the growing interest in health, wellness, and natural beverage options that are low in sugar. But aside from consumer preferences, what other factors influence this growing demand? Several key market trends play a major role in shaping Vita Coco's demand. These include the global wellness movement, which encourages healthier lifestyle, increasing expectations for sustainability, and continuous product innovation to attract a broader audience. However, supply chain stability remains a challenge due to a global trade disruptions and logical costs. Overall, Vita Coco's ability to adapt to these evolving trends allows it to maintain strong global demand while continuing to expand its presence and reputation as a leading natural beverage brand.
So now moving on to its production structure and its cost structure. So basically, in its production, Vita Coco Company reported significant financial losses with an operating expense higher than its operating income, leading to a gross loss of $155,441. In Philippine pesos, this exceeds the 3.7 million pesos. So to improve, the company should focus on bestsellers, reduce costs, and enhance productivity. Operating with a lightweight structure, it sources coconut water from non-owned factories, ensuring flexibility and lower fixed costs. Collaborations with contract manufacturers and long-term suppliers contracts enhance supply chain reliability while global distribution meets market demand.
Okay, so how does the Vita Coco Company manage its costs and production process? So, the Vita Coco Company maintains a lightweight and efficient operational structure that focuses on reducing costs while ensuring production flexibility instead of owning large factories. So the company works with third-party manufacturers and co-packers in key regions such as the Philippines, and the South America. So this approach helped the company adapt quickly to market demands, avoid high fixed costs, and maintain consistent quality. Although the company experienced challenges like rising operational costs, it addresses them by improving efficiency and concentrating on its best-selling products, particularly its original coconut water. So, in short, the Vita Coco cost and production system allows it to stay flexible, sustainable, and globally competitive, which ensure a long-term success in the beverage industry.
The company continues to demonstrate strong and consistent growth, largely driven by rising consumer demand for healthier beverage alternatives and its effective operational management across various international markets. Its flagship coconut water product has strengthened the company's reputation as a leader in the natural beverage industry, appealing to both traditional and new markets focused on wellness and sustainability. However, even with this impressive growth, Vita Coco is also facing a set of challenges that influence its profitability. Among these higher production and shipping costs, the global inflationary pressures and newly imposed tariffs that has increased the cost of goods and logistics. These factors have created tighter margins for the company, making operational efficiency and cost management more crucial than ever. Despite these external pressures, Vito Coco remains financially secure and strategically focused. The company has managed its resources wisely, sustaining a strong balance sheet and maintaining liquidity that allows it to invest confidently in new opportunities and market expansions. Its resilience, adaptability, and long-term vision continue to position it as a long competitor within the global beverage industry. Overall, Vito Coco exemplifies a company that not only continues to grow in competitive market, but also has the stability and strategic mindset to sustain that growth well into the future.
Now, what does this tell us about Vita Coco's financial performance? Based on the company's report for the first 9 months of 2025, Vita Coco is performing very well financially. Using managerial economics principle, the break-even point was calculated at around $286.4 million dollars in sales, but the company actually earned $481.99 million dollars. This means that Vita Coco is far above its break-even point and has a margin of safety of about 40%, showing a strong operational efficiency and financial stability. Even though rising input and shipping costs lowered their gross margin from 40.5% to 36.9%, the company remained profitable. Their pricing strategy also supports this trend, with an average price of $2.50 to $3.3 per bottle. Vita Coco positions itself as a premium brand. Consumers continue to buy despite the increase, which shows that demand is not very sensitive to price. Overall, Vita Coco is managing costs well, maintaining demand, and staying competitive in the global market.
For the economies of scale and scope, Vita Coco successfully combines efficiency and innovation to strengthen its market position. Through its global production network, the company benefits from producing on a large scale, which helps lower the cost per product. At the same time, it practices economics of scope by expanding its product line from coconut water to coconut milk and performance beverages, while using the same supply chain and distribution system. So this strategy allows the Vita Coco to manage resources wisely, reduces costs, and maintain a strong brand identity. By balancing growth efficiency and sustainability, so Vita Coco continues to lead the global plant-based beverage market.
Vita Coco benefits from economies of scale and scope, enhancing cost efficiency and operational synergy globally. With production in 17 factories across 7 countries and partnerships in 4 others, the company spreads fixed costs over high output, reduces product costs, and strengthens supplier bargaining power. Its diverse product line, coconut water, coconut milk, coconut juice, coconut oil, and power lift, shares supply chains and distribution networks, lowering operational expenses while maintaining brand consistency. These advantages support growth in emerging markets and provide pricing stability. However, risks like supply chain disruptions and overexpansion require careful management to sustain profitability and brand identity.
Next, I'll be presenting a brief assessment of Vita Coco's break-even performance and pricing strategy. To start, you can see here that Vita Coco shows strong financial health based on its Q3 2025 data. The company's break-even sales are estimated at $286.4 million, dollars, calculated from fixed cost of $105.68 million dollars and a gross margin of 36.9%. Their actual sales reached $481.99 million, exceeding the break-even point by $195.6 million, which gives them a margin of safety of 40.6%, a clear sign of operational efficiency and financial stability. And in terms of volume, the break-even points equals around 114.55 million bottles, assuming a $2.50 price per bottle. Despite a slight decline in the gross margin from 40.5% to 36.9% due to a rising input and transport costs, Vita Coco maintains a premium pricing strategy between $2.50 and $3, which continues to support profitability. And what's notable is that the company's 25.8% year-over-year growth in coconut water volume, showing that demand remains strong and relatively insensitive to price changes. This reflects the strength of their brand and the effectiveness of their cost management. In summary, Vita Coco's break-even performance, pricing strategy, and demand resilience highlights its strategic strengths, particularly in economies of scale, brand positioning, and financial discipline.